Good morning, good morning, good morning. Welcome back, everyone. We are looking at Bitcoin on a weekly time frame. A few things I'm going to quickly pull out and explain, and then I will try to get us to our Mondays quickly. So, as you see, this last week we had a very hard sell off. A lot of longs are now either underwater or liquidated completely. And we are starting off our new week, but we did not yet tap into the previous low of the week that we just closed. This week, until we get above 22,990, I'm not looking for further upside. I'm expecting the next dead cat bounce coming in right here at 22,990, basically 23,000. Okay. I would be very, very surprised. Yeah, I'm not even going to be surprised. I'm waiting for the reaction here. I'm not going to assume we're going to go up or down. We're in the middle of my two EMAs. The naked point of control is right here, which is about $500 under us at 20,750. As soon as we have an hourly open and close under 20,800, I would expect us completely testing the downside support much more aggressively. So just keep that in mind. Pre-market right now for USA isn't doing as excellent as you'd expect either. It's about 260 points down right now. Let me zoom into a 3 minute. Okay, so it does look like it's bottoming out, and it looks like we're bouncing off the bottom right now. So we might get a little bit of relief into market open today. Since pre-market we're dropping down so hard, when the market opens up at 9:30, expect a rise for catching all the people who are panic shorting, selling off guard. Maybe within 15-30 minutes you might see a little bit of a rise, a dead cat bounce, and then roll over. The first place I'm just gonna go to the daily, so I don't even want to look at that no more. Look at the daily. We already know above 23,000 is our area for looking for higher. Well, now you have another warning right here at 22,655. That's where I expect our first resistance to come in, and then every daily open and close, you will see these EMAs come down to touch the price action. So your level of resistance to the upside is going to get lower and lower, meaning harder to go up. Okay. Let's. Okay. So for the downside, as you can see, these three pink lines, that's a lot of money that's sitting right there. That's what I'm saying. Even if we go back up, they want to collect some money from both sides. So right now, everyone is on a short or trying to short, panicking. Ideally, market makers caught a lot of money right here, right? Either people who are shorting, people who sold, and people who are trying to buy the dip. Okay, but all that's happening. Well, we can rise it up into New York Stock Exchange open. A lot of people are going to wake up to the stock market open and weren't in it, and they're looking to buy the dip because they were patient and they saw this now discount and they want to enter. So you might see some little bit of upward action into New York open, and then what's going to happen is the people who actually shorted and took profit will short again, more than likely at this area, and try to bring it down lower. What we need to do is see how New York reacts with people when we open. If we are continually seeing the US equity markets sell off, there's no way that the crypto holders are going to hold strong over equity selling off. The issue with crypto is the liquidity is quicker. It's harder to get your cash if you're selling stocks, but you get your crypto cash immediately when you cash out. So for flight to liquidity, if people have other assets that are hurting, they might need money to cover those positions before they get margin calls. They might have to take it out of other things that are in profit, like their Ethereum position, which might be already in 100% profit, and so on. A lot of these people who were buying these dips, if they weren't taking this profit over here, as soon as we cross over here, now they might not be in profit, because now we're all the way back to where we were at July 15th. Okay, so we just erased one whole month of upward price action in one day. On Friday, you erased all these gains. So that was about a 25,000 all the way to 20,800, about a $4,200 drop. So I'm sure not everyone's liquidation level was able to survive that. If you didn't have a stop loss, you didn't manage your risk properly, you know, Only people who are super excited are the people who tried to short it, and they, you know, took their profit, and now we're probably going to test their entry. And if they didn't take their profit, then they're going to have the pressure on them. So the market is going to do both ways, and the market maker is going to be making money on both sides, and the exchange is excited because all you frantic people are trading like the world is ending. So let's go look at a quick 4-hour. And I did give a 1-to-1 extension of where we would go. I'll do it right here. So, you know, like, oh, I did not show my charts. I mean, my drawings, but yeah, basically what I'm seeing is we are now testing the bottom of this red channel. Okay, the short was up here. The bottom of the green channel is a long for me. So this is this consolidated green channel that we're in. The top of the green channel is a short. So you have to look at your time frames properly and then trade accordingly. As of right now, we're testing the bottom of this channel. If this channel breaks, we are going to get a move at least to here. At least to there. Here it is, 18,600, which is your prior month's low. So breaking under that, now you are not only bearish on the weekly time frame, well, not bearish, but you're pulling back on the weekly. You're pulling back on the weekly, okay? Two weeks, and then if you start going under that level I just said, here's your monthly, which I'm sure 95% of people who are trading never take a peek at. And here's your monthly. So if you guys follow my EMA strategy, okay, the way I use my EMAs, monthly is not only under the 21.55, it's resting on the 100, trying to find support between the 55 and 100, and it's already getting rejected off the 55. So for it not to touch this is like highly unlikely in my book, and it might even hit that and lower, but at least tap it. Just a little tap, 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 like Happy Gilmore. Just tap it in, okay? I'm waiting for that on a monthly, okay? And that is about 16,000, 16,000, or 16 and a half, 16, low 16, around there. I can give you the exact number if I stretch all this out, but it takes forever to size this chart for the video, see? And I'm gonna just show you guys this for the scalpers. So here's a 15-minute chart. If you got it off of the previous week low or in this area because this was tested, good for you. You are already should have been taking some profit here on the 21. You have another opportunity to take a profit on the 55. You sure as heck better take profit over here on the 200. And then when you have 15-minute opening closes above this, you can start targeting higher levels. But at this point, 80% of my trade is done. The rest is in stop profit and stop losses and profit. I'm just trying to see if we're going to get to the next extension or not. But more than likely, I would be starting to hedge a short just in case we start pulling back. Because we're not showing strength, we're showing weakness. If strength would be like this, we would be above the EMAs and using the EMAs as support. Weakness is this, we're under the EMAs and using them as resistance points, take profit points. The one good benefit I can say is that we were trying to do a rounding bottom situation, but what happened is the volume is dying down and we are going up to kind of do what you call a bearish volume divergence for another pullback. So let's see, the next long might come in around at 21, 70, 21,100, something like that. All right, well, that's enough of Bitcoin. Let's go to a quick weekly on Ethereum, and I'll be out of here. So here is Ethereum. Unfortunately, we are dancing with the devil at the 200 EMA. We are looking like we're losing it. The 21 EMA is coming in as resistance. Yeah, on a weekly level, I am just hoping that we can close sideways or higher, because if we can't close at least above 1768, we're just gonna basically look for downside. The fast move up is done into resistance. We were expecting this. Now it's about support. We were looking for support here to continue further up. Now it looks like we're losing this. We don't want to see the 21 EMA cross 200 to the downside. Once that happens, I'm going to be uber bearish, and I'll be using all those EMAs as resistance to the upside. So just keep that in mind. Let's go to a daily. Daily, we are actually, okay, I'm going to do a quick look at Bitcoin daily. Where's the 200? Oh, wow. Okay, never mind. I was wrong. So if you look over here, this is where Ethereum is at right now. It's in this stance on the EMAs, okay? We are not under the purple. Now look at Ethereum. We are just getting under it right now. After finding support, we just breaking under it. We are trying to hold support. The 21 EMA is above it, so that's the one saving grace I have for it. But we need to have higher time frame open and close above it, and hopefully the 4-hour can get us there. But right now the daily is trapped under this 55 EMA, so until we have a 4-hour open and close above 1650, there's only downside potential, and this looks like it's setting up a head and shoulders, as I was saying for a few days. The head and shoulders setup can be a fake out though. It can go like this. I've seen it multiple times, like this. There's a head, and then it's trying to tell everyone, oh, we're gonna go on a dump, and then bloop, just liquidates everyone. So don't get like into the shape head and shoulder. I just say that so people understand what I'm looking for. I'm looking for some divergences now. Okay, if we go up to test my 21, I'm looking for some bear div to take a short to confirm the downside bias. If we're actually supposed to go up, and this is a bull flag, right? If you're assuming, hey, we're making a bull flag, all right. Well, first of all, my bull flag is completely invalidated under my 21 EMA. But if this was a bull flag, you would have some kind of RSI, MACD, volume, some kind of divergence to say like, hey, the selling is slowing down, accumulation is starting, buyers are stepping up. You would be able to see that in multiple other signatures. Even my EMA would be like pointing up, you know, it's not in that stance. And then once EMA does one of these moves under the 21, it was a trap. Like this was the trap to trap all these longs up here. There's no reason the market maker is gonna let these guys out. The way I've seen them do this, they'll let these guys go super over leverage if they weren't leveraged in the first place, because they bought the dip here. They're gonna try to buy the dip as we're going up, thinking, okay, the bottom's in, and then it's gonna hit the resistance at 21 and then roll down lower. This is gonna be one leg, it'll go sideways, one more leg, go sideways, one more leg, 3 legs down. Take out all this liquidity, make an inverse head and shoulder, and ride it back up. Exact same thing as this formation, but inverse it and put it like over here, like this, in a curving upwards formation. That's what I'm assuming. But time will tell. Time will tell. Let's go to a 4-hour. Zoom in a little bit on this price action, and then I will do my quick feel. Oops. Ignore all these. All right. So on a 4-hour time frame, my biggest well, there's two. I'm watching this white EMA and I'm watching this pink EMA. Okay, those two are the ones that I just want to see the reaction at. Okay, we are bouncing off the previous day low. That's fantastic. What we need to do is at least we need to get all the way to the white EMA before we see a real upside. The dead cat bounce can come all the way to here, 1768. Until we have hourly open and closes above it, I'm not looking for higher. I'm only looking for where I'm going to want to short. More than likely, it's going to come to this monthly open because there's a naked point of control here, this pink line, and then roll over. You're going to take out the highs of the previous day. You're going to tap into the monthly open and then roll over. And I think we have about 8 or 9 more days left on this month. So if we don't claim this level before the month closes, we're going to have a red candle. So just keep those things in mind. You know, draw some lines on your chart. Maybe you need to scribble on your chart like I scribble on mine so that certain levels are sticking out and that you're aware of them. Right now, the 21 EMA, here's your previous day high. So yeah, basically there's not really anything to even talk about right now. We're in a range. You're in this little box. You could take a short from here. You could take a long from here. Your stop loss is right under this long. If you're taking a short here, your stop loss is right above the naked. If you want to be smart, put your stop loss right above the naked point of control. If you're taking a long off here, put your stop loss right under this naked point of control. Use the naked point of controls as a way of knowing you're wrong, because that money is being hunted. So if you did get hunted, well, it was meant to be. That's all there is to it. You can't move the market with your money. Whoever is moving the market, they're doing it at specific points, because there's no reason to move it past a specific point because it costs them money to do this. So there's no reason to spend more money and take more risk and waste more time when there's no money to be taken in liquidity. So right now, this is not bearish to me. As soon as you lose 4 hour, well, I'm gonna say like 15-minute open and closes under 1523, just be warned that you have a possible long attempt here, because wherever you're gonna stop out of your short is a possible long area. Same with your short over here. If you take a short here and you get stopped out, well, the idea is then there's probably some support and higher upward movement. Well, what you do is you flip your position, take your long on the next bounce of it, and put your stop loss underneath it. It all depends on how or what you're looking for on the larger time frame. Then zoom into the 4 hour and whatnot. The 4 hour is consolidation of one daily candle. How many 4 hour candles do you get in a daily candle? And then what I just told you, what we expect for the day. The day is fighting this 1646 level to the upside. Without a 15-minute open and close candle above there, why the heck are you looking higher? That's just like psychotic in a sense. So, if you're, if at that point right now we're floating. I'm going to be waiting for a specific point like this. Previous week low or the previous day high. Once it comes to those areas, I'll wait for reaction. I'll check my volume. I'll check my MACD. I'll check my EMAs. I'll check the order blocks. I'll check, whatever I can check to see strength in this upward move or not. If I see any signal showing, hey, this is a false rise, or there's some bearish divergences, or we're overbought, we're oversold, whatever, then I know that hey, this is not something to be baited into. Maybe take the counter trade and fade the move. The move right here to the downside, I said that when markets open, we should probably see a little bit of upside into resistance, then roll over. How high we can go, I don't know. This 55 EMA is a guide, but the real resistance is the 21 EMA is what I'm waiting for. So we can pop up all the way from here to 1700 and then roll over, and it's still okay. We can go all the way to 1768 and I'm still not bullish. I will be like, all right, my absolute ideal short entry is walking up to my face, right to my science EMA. Like, why wouldn't I take this short from here and let it ride down? Why wouldn't I do that? If it comes all the way down here, why wouldn't I take a long? Like, there's no reason why I wouldn't take the liquidity with the market maker with the stop loss right underneath. If it's going up here, why wouldn't I take a short here with the stop loss right over here? I'm only going to lose, what, $5, $10 in my trade, but I have the potential risk reward of this whole downward move. This whole move that's coming right now to take all this liquidity out, I get to eat all of that. As opposed to, oh, I'm wrong, I lost $5, and then it wants to keep going up, fine, then I'll short over here. I already know where I'm going to short. I have multiple areas of shorting because I'm not convinced that this is an upward. Now, I mean, I was already warning you guys head and shoulder, but now I'm like pretty sure the trap has sprung. Now I'm looking for the accumulation signatures. I'm looking for the panic and fear to die down, etc. So that's what I'm saying about this. Let me remove these triple TA. I will go quickly on a 15-minute. Just fast thoughts, and then we are out of here. Okay. Done. Done. Boom. Alright, so now we are looking at a 15-minute. We're doing kind of like what we were showing on the, I think it was Bitcoin. We're on the 21, we're going to test into probably the 55 or the 100, and then look for the rollover around our 200 EMA. And then if we are like really going to hurt the shorts, okay, because, I don't know, do we have a gap? Let me double check. Sorry guys, let me double check. One quick thing. I was not really paying attention to the market last night. I had to deal with some other stuff. Oh yeah, there is a gap. Huh. So, if you are looking at CME, we have a gap. Why wouldn't we come fill this? So just keep that in mind right here. If now I want to play my dead cat idea, I'm looking for it like this. That's how I'm gonna assume we're gonna do this. And then hold on, let's double check Bitcoin because Ethereum might drag everything up. Yeah, you don't have anything. Okay, well, there you go, guys. You just saw it. Warning to Bitcoin people. Okay, warning. If what I think is happening is going to happen. So if we do gap and go, meaning when markets open, we don't get that fill back up and we just literally break the bottom down and go down, that means that gap was a professional gap and don't think about filling it, and we can basically just assume that we are gonna just tank to much lower levels to grab liquidity on the CME. Okay, like 1370, I think I had one level here, and then 1200. But if this, like I said, into market open pumps up and fills this empty gap, okay, your gap will be filled. Then you can see if we're gonna get resistance to the downside or whatnot. But that is one thing, okay. But then what's gonna happen in Bitcoin, right? Ethereum is gonna drag Bitcoin up, and then you might get our ideal rejection on this, because this can come like this. So just be wary of that, because Ethereum is going to go fill that gap. Bitcoin might do it too, right into the open, like within an hour or so. If it doesn't happen within an hour, I'm just going to say it's going to be a professional gap and we're just going to freaking gap and go kind of thing to the downside and refill it like Wednesday or Tuesday, Wednesday, or during like market reversal day. Like Monday, Tuesday, we're just going to be like pressure down, pressure down. Wednesday, like mid reversal, go back to the upside, test our breakdown area, liquidate people, stuff like that. So be wary. All right, guys, that's it. I hope you guys had a great day. I hope you guys had a wonderful weekend. I will talk to you guys later today after work for a live stream for questions and concerns if anyone's got them. So 7 p.m. Central. Feel free to get the information in our Discord group below. In the description of this video, you'll find the Discord group invite, so join. And then, don't forget to like, subscribe, and press the bell button for notifications. If you have any questions or concerns, just leave it in the section below. If there are other assets you want me to cover, feel free to ask. I will share a chart with you, no problems. And then aside from that, guys, I just want you guys to stay safe in this market. Let's wait for New York open reaction. If I'm expecting New York to pump into open, before it opens, you're going to dump. It's going to steal all the liquidity and have the fear in the market before it opens, and then reverse on everyone's face as soon as the freaking market allows the first trade. So watch out for that kind of move. It's mean, but it happens a lot. And yeah, if you have any questions or concerns, leave it in the section below. Talk to you soon. Have a great day. Woo woo. Happy Monday.